Hello everyone, my greetings to each one of you. This is the 22nd session on estimation of national income. In the previous 3 sessions, you have understood about the components of income method and steps involved in estimating national income by income method. I am Poonam Vohra from Macroeconomics Learning Center. This session focuses on few numericals based on income method. So let us begin. Let us begin with the first numerical. The question is to find out compensation of employees from the information as given. All these items are in crores of rupees. These items include net factor income earned from abroad, that is 10. Depreciation 60, bonus 40, subsidies 5, wages and salaries 400, NDP at market price 700, indirect tax 50, and finally contribution to provident fund by the employers 20. Now let's have a look at the solution. I have been telling each time to write formula before finding any numerical. In this case, to find compensation of employees, one needs to mention its components. Compensation of employees is equal to wages and salaries, that is in cash, supplemental labor income, and wages in kind. Then one needs to find out whatever is given here. Simply substitute the values. Now have a look at the question once again. We find net factor income earned from abroad is not required. Depreciation is not required. Bonus is a subcomponent of supplemental labor income, so it will be included. Subsidies not required. Wages and salaries in cash will be included. NDP at market price not required. Indirect taxes are not required. Contribution by the employer to the provident fund will be included as it is a component of supplemental labor income. So by including these components, one gets compensation of employees. That means compensation of employees is equal to wages and salaries plus bonus plus contributions by employer to the provident fund, which is 400 plus 40 plus 20, that is 460 crores of rupees is the compensation of employees. Now calculate operating surplus. The information provided is in crores of rupees. Various items are sales 4,000, compensation of employees 800, intermediate consumption 600, rent 400, interest 300, net indirect taxes 500, depreciation 200, and finally mixed income 400. Now let's have a look at the formula. Formula is domestic income is equal to compensation of employees plus operating surplus plus mixed income. We need to find operating surplus. So then formula becomes operating surplus is equal to NDP at factor cost or domestic income minus compensation of employees minus mixed income. So one can find NDP at factor cost, which is in actual sense sales plus change in stocks minus intermediate consumption. Here change in stocks are not there. So it will be sales minus intermediate consumption. Since it is at factor cost, minus net indirect taxes, as it is net, so minus depreciation. And then one has to deduct compensation of employees and mixed income. So substituting these values, it is then 4,000 minus 600, minus 500, minus 200, minus 800, minus 400. One gets 1500. Now find NDP at factor cost, for which various items are given and these values are in crores of rupees. Items are medical facility to employees 600, uniforms provided to security guards 500, wages and salaries 6000, employers' contribution to Provident Fund 300, rent and royalties 400, interest paid 200, dividends 100, corporate tax 50, and finally mixed income 700. The formula is known as we have just discussed, that is, domestic income is equal to compensation of employees plus operating surplus plus mixed income. So one has to look into the subcomponents of each component and then substitute the values, which includes wages and salaries, employers' contribution to Provident Fund, medical facility to the employees, and uniforms provided to security guards are a part of compensation of employees, that is, wages and salaries in cash, supplemental labor income, and wages in kind. Then for operating surplus, it comprises of rent and royalties and interest paid, also dividends and corporate tax, and finally mixed income needs to be added. So substituting the numerical values for each of these items, one gets domestic income equals to 6000 plus 300 plus 600 plus 500 plus 400 plus 200 plus 100 plus 50 plus 700, that is 8850. This is the last numerical in today's session. So far you have found compensation of employees, operating surplus, and domestic income. Now finally find out national income by income method. Various items are given. All these values are in crores of rupees. The items are mixed income 200, old age pension 20, dividends 100, operating surplus 900, wages and salaries 500, profits 500, employers' contribution to Social Security Scheme 50, net factor income earned from abroad minus 10, depreciation 50, and finally net indirect taxes, which are also 50. The formula to find national income by income method comprises of NDP at factor cost, which is a combination of compensation of employees plus operating surplus plus mixed income plus net factor income earned from abroad. One needs to substitute the numerical values to get the answer. It's simple. So one finds wages and salaries, employer's contribution, operating surplus, mixed income, and net factor income earned from abroad out of the information as given. So substituting these values, one gets 500 plus 50 plus 200 plus 900 plus minus 10. That is 1640. That is national income. I am sure you have understood the entire income method of estimating national income. This session focused on numericals based on income method, as you have done few of them. In order to have complete mastery, try solving as many numericals as possible. So with this, the session comes to an end. The next session would focus on expenditure method of estimating national income. Till then, keep practicing, keep learning.